Hey everyone, welcome back to Corporate Decoder, the place where we decode the massive pile of corporate jargon so you don't have to. Today we're diving into the latest filing from Fundrise Real Estate Interval Fund 2 LLC, a company that promises to democratize real estate Interval Fund 2 LLC, a company that promises to democratize real estate investing, but as always, let's see what the numbers and legal speak underneath all that hype really say. We're sifting through their Form N2, a registration statement that acts like their official announcement to the world about what they're doing and how they're doing it. Think of it as their big reveal to investors before they start selling shares. Alright, so they're officially filing on a sunny August 15th in 2025. This is essentially their coming out party for the public markets, and it's packed with details about their strategy, their risks, and importantly, their finances. First off, the Fundrise Real Estate Interval Fund 2 LLC. It's a mouthful, but what's key here is interval fund. This means it's a special type of closed-end fund. It's not like a regular mutual fund where you can buy and sell shares every day. Instead, it offers some liquidity by allowing shareholders to sell a portion of their shares back to the fund on a regular basis, typically quarterly. And this is a big, but they might only repurchase a small amount, like 5% of shares. And even then, it could be oversubscribed, meaning not everyone who wants to sell might be able to. Their stated goal is pretty standard for real estate funds. They want to generate income and then grow your investment over time with not too much ups and downs, and ideally not moving the same way the stock market moves. Now, how do they plan to achieve this? They are putting at least 80% of their money into private real estate deals, those that aren't on the stock market, and publicly traded real estate stuff, to like REITs or real estate company stocks. Who's driving the bus? Well, it's Fundrise Advisors LLC, the investment advisor, and they are owned by Rise Companies Corp. They operate the Fundrise platform, an online tool where individuals can invest in these real estate opportunities. Has a crucial detail: they are a non-diversified fund. This means they can put a bigger chunk of their money into fewer investments than a diversified fund. This can be good if those investments do really well, but also much riskier if they don't. Let's talk money. The fees are laid out. And looking at this summary of fund expenses table, we see a management fee of 0.85 potom. Either 8 ob als ida. When you add it all up, these operating expenses are estimated at 1.36% annually. For invested dollars, you invest about $13.60 per year goes towards running the fund. Not a huge amount, but it adds up over time, especially when compared to other funds. They even paint a picture for you. The example shows that if you invested $1,000 and it grew 5% per year, after 1 year, your cost would be about $14, and after 3 years, about $43. This is just an example, so actual costs could be higher or lower depending on how the fund actually performs. Now, here's where things get a bit more concrete. Fundrise Real Estate Interval Fund 2 LLC was officially born on January 17, 2025. So this is a brand new baby company with no real history to speak of. Remember, their objective to generate income and grow your capital. That's not set in stone. The board can change this without shareholder approval, so the fund's main goal could shift down the line. How are they selling these shares? Primarily through their own Fundrise platform. This means they're cutting out traditional brokers and aiming for a more direct connection with you, the investor. They are very upfront about one massive risk. This is not a one-size-fits-all investment. This is risky, and there's no guarantee they'll hit their goals at all. They plan to be a REIT, a real estate investment trust. This means they aim to pass through most of their taxable income to shareholders as dividends, usually avoiding corporate taxes. But meeting REIT rules is super complex, and they have to constantly check off boxes to keep that status. If they fail, it's big trouble. If they mess up the REIT thing, they get hit with corporate taxes, which really eats into profits available for you. To stay a REIT, they have to distribute at least 90% of their taxable income every year. That's a lot, and it can force them to borrow money or sell investments. Even if market conditions aren't ideal, just to make those payouts. Scroll statement of assets and liabilities et ESFEB 7/2025. Our $1,000 scroll. Switching gears to their actual financial statements for February 2025, they're brand new, so this is more like a birth certificate than a financial report. At February 7, 2025, they had $10,000 in net assets. This is before any real investing happens. Scroll statement of operations cover the period January 17, 2025. Inception through February 7, 2025 are conception through February 7, 2025 quathorizational expenses. Fortunately, the advisor waived those statement of operations shows zero income but $10.7 in organizational expenses. Fortunately, the advisor waived those, meaning Fundrise paid for it all for now, but they could still get reimbursed later. Scroll statement of assets and liabilities. Unaudited 2025. All the third, offering costs 565,631 scroll. Fast forward to June 2025 and those organizational and offering costs have ballooned to $506,5631. This is money spent getting the fund ready. This is all being paid by the advisor for now, but it's basically a loan to the fund. Fast forward to June 2025 and those organizational and offering costs have ballooned to $565,631. A huge risk they keep hammering is the interval fund structure itself. Shares aren't traded on a stock exchange. Their main liquidity source is the repurchase program. But it might not be enough and you might not be able to sell when you want to. Then there's the whole REIT thing. They explain all the ways they could mess up and lose that tax efficient status, which would be a massive blow. And here's a major conflict of interest. Rise companies, the sponsor and its subsidiaries, including the advisor, have a lot of other projects going on and they are all managed by the same people. This means there's a constant balancing act they have to perform. Because the advisor gets paid based on the fund's asset value, they might be incentivized to keep assets longer, even if selling them would be better for shareholders. This is a classic conflict. They say they have policies to manage these conflicts, but there's no guarantee these will always work perfectly. Scroll, report of independent registered public accounting firm. Can opinion on the financial statements. Aptly, we have audited the accompanying statement of assets and liabilities of Fundrise Real Estate Interval Fund 2, LLC, the fund as of February 7, 2025. Cisco, their auditor, KPMG, gave a pretty standard opinion for a brand new company, basically saying the financials as presented are fair, but they haven't really done anything yet. And that lack of a trading market is a big deal. They keep saying you probably won't be able to sell your shares to anyone else easily. So what's the story here? Fundrise Real Estate Interval Fund 2 LLC is a new venture, aiming to make private real estate accessible through an interval fund structure. They're putting their faith in the Fundrise platform and their advisor Fundrise Advisee LLC. It's a highly complex business with a lot of moving parts and a REIT status that is crucial but also fragile. The biggest strengths are their stated mission to democratize investing and their tech-forward platform. However, the risks are immense. The interval fund structure means limited liquidity. The REIT status is a constant compliance challenge, and the conflicts of interest between the fund and its parent company, Rise Companies, are significant. Given the brand new nature of the fund and the inherent complexities of real estate and REIT regulations, this is definitely a high risk, high reward play. Alright, that's our deep dive into Fundrise Real Estate Interval Fund 2 LLC's filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.